Okay, so you know how everyone wants to find the next big thing in the stock market?
Right?
Like that company that's going to skyrocket?
Yeah.
Well, we're diving deep today into some really cool ideas from this book.
Okay.
What to Look For in a Big Winner by Bill O'Neill.
I like him.
And honestly, this guy was like the Sherlock Holmes of stocks. I mean, he left clues.
He did.
And we're going to try to piece them together
Yeah,
to figure out how to spot those winning stocks.
it's true. And you know what I like about O'Neill? He wasn't just obsessed with numbers. He wanted to understand, like, the why.
Okay, the why.
The why behind the numbers.
I like that.
And one of the biggest whys he talks about is actually really simple. Need.
Need. So, like, everyone always says invest in what you know.
Right.
But is O'Neill saying take that a step further?
Yeah.
Invest in what everyone needs.
Exactly.
Okay.
What are those things that people can't live without?
Yeah.
The things they crave.
Mm-hmm.
Those are the companies that are going to last.
It's so obvious when you say it like that. It's not about, like, chasing the latest fad or,
Yeah.
you know, like the shiny object. It's like, what does everyone need?
Yeah, what's that fundamental need?
Okay, so give me an example. Give me an example of a company that just nailed this.
Okay, Apple,
Well,
before the iPhone,
yeah.
did anyone walk around thinking, man, I wish my phone didn't have buttons?
No, nobody.
No.
Like, you called someone.
They created that need.
They created the need. It's,
Yeah.
oh my gosh, they understand us.
They understood psychology. They understood design.
Yeah.
They understood this desire to be connected in a way we hadn't even thought of yet.
So smart. Okay, so we found a company. It's meeting a need.
Right.
What's the next thing on O'Neill's, like, treasure map to stock market success?
All right, so even the coolest product
Yeah.
needs a strong foundation. Okay. And that's where earnings and sales growth come in.
Okay, so you're saying it's not enough to have one good product.
No.
Investors want to see that success, like, continue.
Consistently. It's the difference between, you know, like a flash in the pan
Mm-hmm.
and something that's built to last.
Okay.
You need those strong financials
Yeah.
to show that the company's in it for the long haul.
It's like proving you're not a one-hit wonder, right?
Right.
You're here to stay.
Yeah.
Okay, so what's a good example of a company that really showed this kind of consistent growth?
Early 2010s, Netflix.
Netflix.
Everyone was switching to streaming.
Yes.
And they were right there.
They were ready.
Their earnings were going through the roof.
Okay, so the market definitely took notice.
Oh, yeah, the market loves that.
Numbers don't lie.
They don't.
Okay, we got a company. It's meeting a need.
Yes.
It's got the numbers to back it up.
Financials are solid.
What's next? What's the next big thing O'Neill says to look for?
This is where it gets really interesting.
Okay.
We got to figure out what makes this company truly unique.
Okay.
What sets them apart from the competition? What's their edge?
Their secret sauce, right?
Yeah, their secret sauce.
Something that other companies can't just easily copy.
Yes, something difficult to replicate.
Right.
Think about Tesla.
Tesla, okay.
Cutting edge technology,
Right.
commitment to sustainability.
Yeah.
And I mean, let's face it, the cars look cool.
They are cool.
They're cool.
But it's more than just cool. They're like disrupting a whole industry.
Disrupting, totally.
Okay, so we found this amazing company. It's checking all the boxes so far.
Okay.
But how do we know that other investors are as excited about it as we are?
That's where volume and institutional buying come in.
Okay, so, like, is this company having a good party?
Are people lining up to get in?
Okay.
Exactly.
All right.
We're looking for signs that the smart money is moving in.
Okay.
Significant trading volume,
Yeah.
especially when it's driven by institutional investors.
So these are like the big players, right?
Yeah, the big players, pension funds, mutual funds.
Oh.
These guys, they're not messing around.
They've got analysts and everything.
They've got teams of people crunching the numbers. And when they're placing big bets, that's a good sign.
Okay, so it's like they're giving us a little insider tip.
It's like a vote of confidence.
Right. Okay, so think about Facebook.
Okay, or Meta, as we know them now.
Right. Meta.
Remember all the hype before their IPO,
Oh, yeah.
and even afterwards, the institutional support they had.
Yeah.
That's the kind of momentum we want to see.
Okay, so we're seeing all this excitement around this company.
Yes.
But we still need to dig a little deeper into the financials.
Today.
And I know O'Neill's big on something called return on equity, ROE.
He is.
But honestly, what is that and why should we care?
It's a good question, and it's simpler than it sounds.
Okay.
Basically, ROE tells us how efficiently a company uses its money.
Okay.
Like, are they taking their investments and turning them into profit?
Got it.
A high ROE means they're using their resources really well, getting a good return.
So it's like if I gave you $100 to start a lemonade stand.
Okay.
A high ROE means you're turning that into a lemonade empire.
You're maximizing your profits.
You're efficient.
Okay.
And O'Neill saw this as a hallmark of companies that really lead the market.
And when I think of a company that just gets ROE, I think of Amazon.
Oh, absolutely.
They are like the masters of efficiency.
They're constantly reinvesting their profits, expanding into new areas.
Yeah.
Their high ROE reflects that, you know. They're playing the long game.
It's true. They're always expanding, always innovating. But we've been talking about ROE as like a single snapshot in time.
Right.
But O'Neill also talks about the importance of trends, right?
Oh, yeah, trends are huge.
Especially when it comes to a company's earnings and sales.
Well, it's like one good quarter,
Yeah.
that could be a fluke.
Right? Anyone can get lucky once.
Exactly. But when you see those earnings and sales climbing consistently quarter after quarter,
Okay.
that's a sign of real strength, like they're building momentum.
It's like that saying, one swallow doesn't make a summer. Right?
Exactly.
We want to see those birds coming back season after season. Yes, consistency is key. We want to see companies that are like exceeding expectations, not just meeting them.
So it's not enough to be a sprinter. You got to be a marathon runner.
Perfectly said. We want those companies that can go the distance.
Okay, so give me an example of a company that really illustrates this idea of consistent upward trends.
All right, how about NVIDIA? Think about them between 2016 and 2018.
Oh, yeah, NVIDIA, they were on fire back then.
Exactly. They tapped into that huge demand for GPUs.
Right, everyone wanted those high-powered graphics cards.
Gamers, data centers, you name it.
And their earnings just went through the roof.
Skyrocketed. Investors who recognized those trends early on,
Yeah.
they made a pretty penny.
They saw the future. Okay, so we've talked about needs, financials, competitive edge, volume.
You're on a roll.
But sometimes it feels like we need a crystal ball to predict the stock market.
Right. If only it were that easy.
So are there any tools or strategies that can give us like a glimpse into the future?
Well, I can't promise you a crystal ball. But O'Neill was a big believer in the power of historical chart patterns.
Chart patterns. Wait, you mean those like squiggly lines on the stock charts?
Yeah, those squiggly lines, they're more than just random movements, you know?
Okay, so there's a method to the madness.
Exactly. Think of them like a secret language, a way of understanding the psychology of the market.
So it's like we're learning to decode the market's secret messages.
Precisely. And one of the most famous patterns, the one O'Neill really loved, is the cup with handle pattern.
The cup with handle. Okay.
Yep. And a great example is Alphabet, or Google, as they were known back in 2004.
Okay, back when they were just a search engine, right?
Exactly. And if you look at their chart from back then, you can see this cup with handle forming.
Okay.
And then, boom, the stock takes off on this incredible rally.
So by recognizing these patterns, we can anticipate those breakouts.
Exactly. It's like getting a sneak peek at the market's playbook.
All right, so let's say we found a company, it's meeting a need, the financials are strong, they've got that competitive edge, the volume's there, the chart patterns look good.
You're on a roll.
What's the last piece of the puzzle?
The last piece, and this is something a lot of people forget about, is liquidity.
Liquidity. Okay, remind me what that is again.
Sure, liquidity is basically how easily you can buy or sell a stock without, like, messing up the price.
Okay.
Think of it this way. Imagine trying to sell a rare antique versus selling a popular smartphone. Which one is going to be easier to sell quickly at a fair price?
The smartphone, for sure. Everyone's looking for those.
Exactly. The smartphone is way more liquid, and O'Neill, he was a big advocate for sticking with liquid stocks.
Okay, so it's like you can get in and out more easily if you need to.
Exactly. It's about having that flexibility.
And you mentioned that institutional investors, they tend to gravitate towards these liquid stocks too, right?
Oh, absolutely. They love liquidity. It makes it easier for them to manage their large positions.
So it's like the difference between navigating a crowded room and having the whole dance floor to yourself.
Yes.
Yeah.
You've got space to move.
Okay, so give me an example of a company that's known for its liquidity.
Microsoft. They've always been a favorite of institutional investors.
They're like the experienced ballroom dancer gliding effortlessly across the floor.
Exactly. They move with grace, and investors feel confident partnering with them.
So we've covered a lot of ground here.
We have.
We talked about fulfilling needs, those consistent financials, having that unique edge.
Right.
The importance of volume, understanding ROE,
Right.
recognizing those upward trends, and of course, liquidity.
Liquidity. Can't forget liquidity.
It's like we've been putting together this puzzle,
Yes.
and now we can finally see the picture.
I love that analogy. But here's a million-dollar question.
Yeah.
how do we take all these insights from O'Meal
Right.
and actually apply them to today's market?
Right.
Like, what companies right now are
Yes.
showing these signs?
That's where the fun begins, right?
Right.
It's about taking these principles and then doing your own research.
Right. So we're not just chasing the hot stock of the day. No, no, no. We're looking for something more sustainable,
Yeah.
something with long-term potential.
Companies that are building something real, something lasting.
Exactly. Not just riding a wave, but creating the wave.
Okay, I like that. Creating the wave. So to everyone listening,
Yes.
here's your challenge.
I love it.
Think about the trends that are shaping the world today.
Okay.
What are those unmet needs? What problems are people trying to solve?
Yes. What are those big problems?
And most importantly, what companies are demonstrating that winning DNA?
Right. That winning DNA.
Hey, we've been talking about all this time.
It's out there. You just got to find it.
It's an adventure, right?
It is. Investing is an adventure.
It is. And remember, it's always about approaching the market thoughtfully.
Absolutely. There's always risk.
There is.
But by understanding these indicators, doing your research,
Right.
you're not just rolling the dice.
You're making informed decisions.
Exactly.
I love it. Well, on that note, thanks for joining us on this deep dive. It's been amazing exploring these ideas with you.
Always a pleasure.
And to everyone listening, until next time, happy investing.